What's going on, you guys? My name is Zach Hartley, and in this video, I'm going to walk you through some real life examples of how to trade breakouts. I'm going to show you some actual trades that I've made, and I'm going to walk you through step by step everything you need to know. Remember to click that like and subscribe button. Let's jump right in. Okay, so a breakout is when the stock moves higher through resistance. So for instance, if you have a stock that keeps getting rejected at $100, and then one day it all of a sudden breaks through to 105, that is considered a breakout, and it is usually caused by additional buyers entering the market. Remember, the stock market is based on supply and demand, and when two orders meet up, the trade is executed. But if more and more people are buying up the shares, that means that the sellers can charge more, and that's usually what causes a breakout, and that's what we are watching for. Now, a breakout trade that I literally made this week was in CTXR, Citius Pharmaceuticals. The reason I like this trade is because you could see very clear resistance at $2.40. It tested right here in February, it tested again in May, and again in June here, and then we saw a very clear breakout through $2.40, and I just locked in about 40% profit on this trade, which is absolutely phenomenal. I also shared it in my Discord chat, which is where I post all of the trades that I'm making. So if you want to see any of the trades that I'm actually making and all of my technical analysis, definitely check it out. The link is in the description to this video. Now, the steps for identifying breakouts and trading breakouts. I'm going to give you 4 easy steps that you can use and apply to your real life trading. Number 1 is that you have to identify levels of support and resistance. This could be a horizontal price line where the price keeps bouncing. This could be a trend line where you're seeing consecutively higher highs or lower lows. That is what we're looking for. You need to draw that out using technical analysis. You need to identify that in the stock that you're looking at. The second step is to wait for a strong breakout. You need to have patience, you need to wait, and you need to be very, very careful with when you enter that position, because if your stock is approaching $100 for the 4th or 5th time, you need to make sure that you actually have confirmation of the breakout before you buy into it. We're going to talk about what is a strong breakout in just 1 second, but that is step 2. Number 3 is to enter the position, and number 4 is to put a stop loss just below support. That's how you manage your risk. Now let's just jump into a strong breakout. What classifies as a strong breakout? This is what we're watching for, this is what we're looking for, and this is what we need to identify to find our entry point. So a strong breakout is number 1, identified by a clear breakthrough of resistance. So like I said, if Apple keeps getting rejected, or whatever stock you hold keeps getting rejected at $100, if it gets to 101, that is not a strong breakout. If it gets to 105 or 106, that is a strong breakout. That's what we're watching for, and that's what we need to keep our eye on. If you break through by 0.5%, that's not really enough to say, hey, we're breaking out right now, because that could just be the band of trading where somebody might have just put in a big order. So what we're looking for is a strong breakout through resistance that has been established previously. The second thing that we are looking for is increasing volume. When people are coming into the market and buying those shares and they're new shareholders, that is going to increase the volume of those shares being transacted that day. And that is a sign of strength. That is a sign that new people are coming into the market, they're buying up the lower shares, and people are able to sell for a higher price. That is what we want over the long run, and that's what we're looking for. Number 3 is that you need to be trading with the trend. What I mean by this is if you are trading a technology stock and you're planning to buy into it on this breakout, you need to make sure that the NASDAQ and the technology indices that relate to that security are doing well, because if they're about to fall off a cliff, the last thing you want to be doing is buying into a technology stock, because you're probably going to lose. It's probably going to be a false breakout, and that stock probably isn't going to have the momentum to carry that breakout higher. So you need to be very careful, and you need to make sure that whatever industry you're trading in, try and make sure that the index is going in the same direction as that trade. So very, very crucial. Now, let's look at a real example. So this is Facebook stock kind of from September 2020 to March of 2021. And I really, really like this chart. I pointed it out several times on my channel, and it's really cool because we have a very clear level of resistance. As you can see, I've drawn a trend line here that basically connects all of the lower highs right here. And you can see that 5 different times the price was rejected by this trend line. And so all I'm doing is connecting the highs here. And as you can see, the price continues to bounce off of these highs. You can also see that we have major support here right around $245, because the price comes down to $245, instantly goes back up. Price comes down to $245, instantly goes back up. And so what we have is we have a level of support at $245, and we have basically a declining trend line right now. And what we're watching for is the price to break out either down below the support level or up above that trend line. And that is exactly what we can see happening right at the end of this chart here. But what's really nice about this, and why I like Facebook so much is because, as you can see, we have 5 different points of rejection here. And the more buildup that you have in a channel like this, and the more buildup that you have before the breakout, it usually means that you're going to see a larger breakout. So the more buildup you have here, the better the breakout's going to be. Try to keep that in mind here, because this is what we're looking for. It means that if the price keeps getting rejected at $120, that $120 level is super strong, and there's a lot of sellers at 120. However, as soon as you break through 120 and you have the key indicators that we're looking for here, that means that all of the sellers at 120 are gone, and it means that there's probably room for that stock to run, and that's what we're looking for here. So before we get into what this stock actually did, I just wanted to zoom in to the last few days here so that you can see what I was looking at. So here's the Facebook stock over the last few days. You can see that we were breaking out through this trend line right here, and we had 4 days where the stock moved higher. We had a little pullback right here on day 3, but on day 4 we saw continued strength right here, which is really nice. And on day 4 we also saw a dramatic increase in the volume. You can see this bar here is almost double the size as all of the other bars for the days before. That represents a dramatic increase in buyers, a dramatic increase in volume, and more people entering the stock, which is always a great thing. You can also see a crossover of our MACD a couple days before, which is also a positive sign. Now, how did this trade actually work out? How did this end up? Well, the nice thing is that it's still playing out. So this is what the Facebook trade looks like right now. So you can see the breakout right here and the day of increased volume right here. And since then, the stock is now trading at $340. So it's given us a nice little 20% return so far. And this was very simple trade. Just by identifying support and resistance, you were then able to get in right on the breakout and ride the stock higher. And it's probably going to continue to go higher because Facebook is still a great company. Okay, now let's take the same example and talk about our stop loss. So you enter in on the breakout here. Where do you put your stop loss? Well, let's say that you got in at $280. Where I would put my stop loss is just below this trend line right here. So for us, it would probably be around $260 right in here somewhere, maybe $265, $270 if you wanted to do it really tight. But basically what we're watching for is we think the stock is breaking through, let's call it 270 in this level here. And so what we want to be okay with is we want the stock to be able to come back down and test 270. But if it breaks through 270 by a decent amount, that's when our trade is wrong. That's when we want to get out of it. And so when we buy the breakout, we want to put our stop loss just below that kind of breakout level so that the stock can break out, come back down and retest and move higher. But if the stock breaks out and comes back down through that level of support, that means our trade was wrong and we need to get out of it early, lock in just that small profit so that we don't lose more money, and then we can deploy that money back into a different trade. Now, in this example, let's say you get in at 280, you set your stop loss at 260. You could have taken profit right here at around $320, and you would have done extremely well on it. A nice little 2-to-1 risk to reward ratio. Now, before we move any further, let's talk about false breakouts, because this is probably the biggest challenge when it comes to trading breakouts, is making sure that it's actually a breakout. So there are a couple of things that I like to watch for. Here is an example of a false breakout with Apple stock from kind of earlier in this year. As you can see, we had resistance set at 135, 137 right here. It was rejected once right here in September, rejected again in December here, and then we were kind of approaching it. And on this day right here in January, we had a big gap up. We broke up to a high of $145. So we very clearly broke through resistance. It was a breakout. The stock broke out through resistance. You can definitely say that. But unfortunately, this candle right here, as you can see, it's kind of like a morning star candle. It basically means that it opened here, it went up a little bit, it went down a bit, and it came back up. And what that shows you is that the buyers and sellers don't know who's in control. They're kind of going back and forth, and there's no clear direction. And as a breakout trader trading a breakout, we want to see a very clear upwards bullish direction. And when I look at this, we do not have that based on this candle. And so that's the first red flag. The second red flag that I want to talk about is the volume here. This is extremely important when trading breakouts. If you don't have the volume behind your trade, it's not going to work. And as you can see here, the volume on Apple on this day was not very dramatic. It was not increased compared to the days before, and that is not a good sign. When we see a breakout, when we see the stock move higher, especially above a known level of resistance, we want to see some momentum and we want to see some volume, and we don't have that in this basically chart right here. And so let me show you how this trade worked out. As you can see, it hit the high of $145, and over the next kind of 1 to 2 months, it came all the way back down to $120. This was the day here. As you can see, no dramatic increase in volume, and those candles stayed red, so we had no continuation. That is a false breakout, and you really want to be watching for how that candle looks on the day of the breakout. You want it to open low, and you want it to dramatically rise throughout the day, and you want it to close higher, because that means nobody's taking profit at the end of the day. You also want to be watching for volume. You want that to be increasing compared to the days ahead. Now, here are a couple final tips to help you trade breakouts that you can actually use and apply. Number one is that volume is just important as the price action. If you see the price break out, but you see the volume decline, I would caution you to take that trade, because it shows that there's not a lot of people watching it, there's not a lot of people getting into it, and you don't have the momentum on your side. Secondly, build up makes a better breakout. So if Apple is continuously getting rejected 10 times at the same level and then it breaks out, that trade has a whole lot better odds than if Apple gets rejected twice at $100 and then breaks out. The longer the build up period, the more consolidation that you have, the better your trade is going to work out. So that's what I'm watching for. When we see Facebook in that example where it gets rejected 5 times and then it finally breaks out, that is a gold mine of an opportunity. I'm always going to buy in when the stock breaks out after the 5th time and it shows strength. That's a great opportunity. So the more build up makes a better trade. And then thirdly, always trade with the trend. If you are trading and buying into a security as the index is falling and the markets are crashing, you're probably not going to win very many of your trades. So I caution you against that. Now, if you are interested in learning a little bit more about these types of strategies, how to enter and exit, and how to make money in the stock market, then definitely consider signing up for my Stock Market Fundamentals course. It is completely free for 2 weeks when you sign up with the link in the description to this video. There's over 9 hours of content that will walk you through step by step everything you need to know. So if you can do the 9-hour course in under 2 weeks, you get the entire thing for free. And I promise you, it'll be the best free resource that you can find online. There's over 5,900 students that have gone through the course. There's over 1 million minutes of watch time, and there's 280 reviews for you to take a read through. I promise you, it'll be well worth your time, and over 80% of students say it exceeded their expectations. Now, just as a disclaimer, I'm not a financial advisor. This is all just my opinion. Do your own due diligence, and remember to hit that like and subscribe button. If you want to join my Discord chat, you can click the join button next to the subscribe button, or you can check out the links down below. I will see you guys in the next video. Good luck trading. Good luck investing. Talk to you soon.